I bid you all good morning, good evening, and good night, wherever you be watching this transmission. It is I, Mike Martins. And man, do I have a very special treat for you guys tonight. I actually have a former Lehman Brothers investment banker slash Wall Street, the whole nine yards, someone that's dabbled in everything financial, understands the rackets, understands the pyramid movement, the upper echelon levels, understands the lower levels, understands basically that has a very good breakdown. And we got him here from the Florida Keys, and it's Dex. Is it okay if we call you Dex?
Yeah.
Okay, Dex. All right, buddy. Tell us a little bit about yourselves, your work background, what you did, and the headaches on Wall Street. Give us a little breakdown on that.
Yeah. So I started out 9/11 actually was one of my right after 9/11 that week I went and I took a job working at an investment bank, and we had a market change. That was one of the main things that I started out with the investment banking first, and we knew that Bush was in office, and the main motivation for us was to push his agenda, because to make investment banking, we knew that it's completely controlled by politicians. So Bush, we had looked up Bush and most of the trading floor. We seen that he owned oil and gas companies, so we went with that strategy with oil and gas back. Let's see, 2000. Oil and gas was roughly
$120 a barrel.
Well, in 2000 it was about $30 a barrel,
right?
And then his end years around like 2007, well, 2006, that was the $160 a barrel.
Yeah.
Right. Yeah. So we were buying the micro caps. So we were doing Abrexis Petroleum was one of our main positions. And Abrexis is actually, it kind of means a bad terminology. So oil is energy. And the markets back then, they thought that they needed it. Oil. Everybody was.
Well, they were throwing that thing out that we're running out of oil in the next 3 years or 5 years, and they kept saying the world will be out of oil. And remember that?
Yeah. It was we just kept, and we had raised so much money on the fact that we were making people money. And, I do want to point out, though, that at the time, when you have a hot industry, you do get these phony companies. We did have a large amount of fake China companies.
Whoa.
Yeah, these Chinese. It happens all the time, even today. Still, it's the current politician.
Let's slightly unpack that, if that's okay. We talking about like some guy comes in, here's a briefcase of money. I need a paper company. I need something just to throw out there and move a few things around. Is that what we're talking? Or are we talking about when the banking was deregulated? Did you see major deregulation in the industry that allowed you to do this, or is it because
Right. So we also see, like, anytime, like right now, you see there's a lot of hot industries. So you get like Starbucks, you had the Luckin Coffee.
Mm-hmm.
What they do is there's a company that I think is a total fraud right now. It's trading under the symbols JKS.
Mm-hmm.
It went up from like $50 to $100 in a couple of days, and now it's back at like $60 within a couple of days.
Mm-hmm.
Things don't move like that. I mean, even if you have a low float, and somebody comes in and buys up the float, the price, it's complete manipulation. And what happens is the people who are supposed to regulate these industries, the government regulations, they're sitting on the sidelines. They don't know what's going on. They're clueless. It takes them about 4 years to catch on to it after the fact. That's what's the problem with America. They can't solve the issue in real time.
That's a major issue. That's a big problem because you got a lot of red tape, a lot of bureaucracy, and a lot of government red tape when it comes to getting anything prosecuted or getting anything rolling. You know what I'm trying to say?
Right.
So
Yeah, we had seen that. Unfortunately, even currently, there was this other company. I remember the symbol of the company, but the company was a electric vehicle company. Electric vehicles obviously has been hot. Tesla went from $200 around last year, 2018, and then most currently they did the 5-to-1 split, and when
right.
it ran up from 1,000, it went up to another. It was if it split, it ended up at $500 on the, or like $450 on the split.
Right.
And if you times that by 5, prior to the split, it was at 2,500 around that. So when you're speaking about the split, it did generate some price increase, and usually that's not supposed to happen. What happens is you put too much shares on the market, you dilute the, you put too much of the float out on the market. It creates too many shares out there for outstanding. So
right.
now right now there's too much of an abundance of shares of it, and it's not getting good price action at this 400 level.
Mm-hmm.
But you'll start to see what happens is the Chinese will come in. So the Chinese made a company, and they were it was a general in the Chinese military, and they buy up these symbols on the U.S. stock exchange, and what you can do is once you get the symbol, they rechange the name. So it could be some kind of company. They go in, they buy it, they change the symbol, and then they come out with this. The guy was it was an American guy who did the marketing. So they put out a newswire.
A front man.
Yeah, he was a front man, like a PR. He was American PR. You call him, the company. You call on his cell phone, and nobody answers the phone.
You know what that is? That's when you do a long con. If you know about con men, they got the front man, they got the diversion guy, they got the spotter, they got everything, right? So continue.
Yeah. So I'm telling, I'm looking at the company. There's no electric vehicle, right? The first thing I know to do is go to the website, look up the company, make the phone call to the company, get to know the company. If you're going to put thousands and thousands of dollars or hundreds of millions of dollars into a company, you got to get to know the company, So I try to call up the company. The company's number doesn't work, So the company stock goes from $4 though, and it goes to it went to $60 in a day.
What?
And yeah, it was absolutely insane. You have people who put $1,000 and walking away with 80 grand by the end of the day. And the moral hero of these people, they're living a dream life. But again, the Americans who are jumping in on it to inherit the market's money on these Chinese military, running these these things, these
shell
dream
companies,
worlds.
empty shells.
Yeah, and it's happening today. It was happening back in 2000, and oil back in 2000 did move up. People were making money, and just like now with the green programs, the green energy and Tesla and all that is making, creating wealth, and freedom for people to be better off. So there is good things in the market, but at the same time, inherently, you're getting this enterprise that comes in from China. These shell companies or these people who know that the jurisdiction isn't going to go. You're not going to go to China and go arrest these people. So again, this can go into what we had in 2018. With this whole China war. I mean, Trump had an agenda prior to his election. He knew of how they handle things via the military. China's controlling everything via military, and he knows that. He's doing business there. He's got the bank account there. He's paying taxes in China. He's doing business. He does business internationally. He's known all over the world and everything. So you do see that that unfortunately the truth behind it is that he came in and he created this war with China. We're dealing with this war right now. Okay, so the current government. I just go into his current
trade war.
Trade. Yeah,
I think it's an economic takeover, in my opinion, of America too.
Yeah, we have issues which and they've been robbing us. Not like I said with the oil, any hot industry, they make these just like they do what they send the products. The fake.
I'm understanding. Like, for example, let's throw an example out there. Let's say face masks all of a sudden become a big industry.
Exactly what I was going to say.
Then they'll jump in and create a face mask company, and then, you know what I'm saying?
Yeah, they did that. And they selling fake masks. It's a tongue twister, fake mask, But they did that at the highest level. They were selling millions and millions and millions, like Trump likes to say, millions and billions and billions of fake medical items. It's putting people at risk, whether, and also he pointed out that they were selling toys that were poisonous,
that's old. That's been happening since the late 90s, since we started input. Yeah.
So, I had, I'm not investment banking anymore. I have my own commercial bank, and I do, I sent you a spreadsheet of the current rates. Mm-hmm. So most people don't have access to that. I have access. I work for I do give out low rates right now because of the rates have calmed down due to the March pandemic and oil crisis crash that pulled down, forced an immediate, Powell had to immediately on a Sunday night, because oil fell 34% overnight because of Russia and Saudi Arabia, that added fuel to the March Madness. I typically call it March Madness every year. So in Q1 2021, at the end of Q1 you get March Madness, which it's a cyclical pattern of a massive sell-off. People typically rebalance their books because of they want to sell positions so that they can if they have taken a loss in a position, they can use it as a deduction on their self-employment tax write-off. Mm-hmm. So that sell-off creates a multiplier effect, and just as if you've been in the investment banking for a while, I call it March Madness, because that's when the sell-off happens.
March Madness, yeah, I've heard that term actually thrown around quite a bit, and I also know it because of the big basketball thing they have down there in the colleges in the United States. I got an article from here that you sent me from August 23rd, 2007. New York, Lehman Brothers, a leader in packaging subprime mortgage into securities, said it would shut down one of its home lending units and lay off 1,200 employees. Where were you on that day?
Yeah, so I'm going to pull up the article too.
The bank said it would take $52 million charge against third quarter earnings.
Yeah. I mean, when I was dealing with that, it really, it it really was, it was a shaky time, because you know at that time, when I walked into the office, Lehman Brothers had a specific. They were considered the best. They were it was a privilege to be working for them. You were considered
Well,
one
so
of
was
the
The Titanic was considered the best too.
right. Yeah, yeah. It was like the bourgeoisie, we call it, right.
Hmm.
We were the leaders, and we back in 2007, the the computer, that we had, the way we did our pricing. Like, I sent you the rate sheets,
Yeah, I was
right?
going through them and I was looking through the FICO scores and a couple other things here. But I want to finish this little part right here. So, Lehman Brothers announced today that the market conditions have necessitated a substantial reduction in its resources and capacity in the subprime space. And then it goes in quotations to say the brokerage firm said in a news release Wednesday. Wow.
Yeah, yeah. So it was in 2007. The actual news, of the mortgage crisis didn't come out for another year.
Hmm.
After that, people didn't put it together. Obviously, I worked in the office, so I knew back, 2006, because I was seeing that the underwriting had stopped.
Ooh, that's not good.
So,
Once you see the underwriting stop, you know it's time to jump ship. You know it's time to jump ship. Now let me ask you, was this around the time where a lot of investors were jumping off buildings?
probably so, yeah,
Because it
because
was around this time there was a ton of people jumping off buildings. And
yeah, yeah, we had a lot. We had a, it was a crisis on. So they basically, when underwriting stops, you can't work anymore. And I guess people that would have been most affected would have been people who had sold. Because what happens is, what we did was, we would write the deals, and then, um, as a bank, you sell those deals.
right.
You right, you portfolio. Everybody now knows of them as collateralized mortgage obligations.
Hmm.
So those debts would be sold off. We'd get paid three. Well, I wouldn't get paid. The bank would get 3%.
Right.
So they
And
would tranche.
does it work the same with mortgage debt swap buybacks?
Well,
That would be with
the
the Federal
swaps.
Reserve. Never mind.
This
That's with the Federal
Right.
Reserve. I'm sorry.
Yeah. The swaps were products that were made,
Okay.
as so that the banks could make money.
Right.
I'm sure plenty of the products that came about, they came at this time, when they, like, the Too Big to Fail, right? That movie, it tries to explain the fact that, he he bought the insurance product, which he had to pay a premium towards, which was the credit default swaps. Those credit default swap programs, those I call them programs, but they were a product. They were products that came to exist in 2007.
Right.
So as soon as they saw, right, as soon as we're in the office, and the underwriting is shut down, and not only is a Lehman Brothers underwriting shut down, but the subprime, that the subprime companies, they weren't necessarily banks, but they were just subprime companies. They were mostly private lenders who would subprime. So they would do, like, 9-10% interest, um, but they would do subprime, which was like you didn't need a credit score. I mean, you had 400, 500 credit score, and as long as you had a house, they were giving you as much money as you wanted.
That was dangerous. That was the buildup.
Right.
That was a
Yeah.
tail end of. We're talking about tail end of 2006 when they started introducing the jumbo mortgages, where, hey, we'll give you 100% loan, 110% loan to value on that mortgage.
Yeah,
And
well, that was called overcasting, and
yeah,
that basically put them underwater. and the conditions of that really, that's why it says their resources and capacity in the quote in that article on Lehman Brothers, that they didn't have the capacity to deal with as soon as somebody had went through an event. So if they cashed out, and whether the values went down, because once the 2008, the value started coming down on the homes.
Right.
Oil prices also did affect, in my view, it did affect the fact that people didn't have enough money in their pockets because of gasoline was like $5 a gallon.
Yes.
So to fill up if you had a mortgage at a 9-10% interest rate,
Ooh,
which was
9%
ridiculous.
VIG. Yeah, I know
They
the
were
people.
selling 9-10% interest rates.
Yeah, well, the people that
yeah.
have a 400, 500 beacon score and a bunch of gaps on file and 2 previous bankruptcies, yeah, they're going to pay 9% VIG, 8% VIG. But we got to keep in mind this is in the States, so they're not borrowing $2 million like in Canada to buy a house. They're borrowing 140 large, 200 large, right?
Yeah, we were writing. Subprime deals. We were given. We wanted to max out the deals. We convinced people to take as much cash as they
And the
wanted.
jumbo mortgages, they convince people for the jumbo mortgages to pay off other credit cards and student loans, right?
Yeah, consolidation was the key.
Yeah.
We wanted you to consolidate. We wanted you out of those credit cards, and um, that was the name of the game. We were getting paid 4%, again. And then what happened was the one unit subprime, Lehman Brothers would take the package, and then they would package these deals into a portfolio, and then they would sell them to other banks. And that's when a lot of the unscrupulous positions happen in the market, because they knew that these portfolios weren't worth the dollar that they were printed on.
The paper they were printed on. So the
Yeah.
article goes on to say the announcement came on the day when concerns on Wall Street about the credit markets seemed to ease, at least for now. I like the language they use too. The
Right?
3 major markets all rose more than 1 point. The rush to the safety of short-term treasury markets also slowed. As a part of the effort to calm the markets, several banks, at the prompting of the Federal Reserve, borrowed $2 billion from the discount window. So tell us about the discount window. Have you been there?
So the discount window, it's kind of like a warehouse.
Mm-hmm.
These companies set up, so if I'm working so I have my discount window, right? I have my commercial bank. What I'm doing is I'm borrowing money in a short term, and I'm responsible. If I write a few $1,000,000 in loans, I'm responsible. That's my warehouse. That's my liquidity.
Right.
Right. But it's their money. So it's an instrument that's given to me to borrow money. And then I give it on the short term, I give it to the customers. And then whether I'm a correspondent bank or I'm working for the bank directly, because you can be a bank, but you're just basically using the discount window. So all money is coming from the Federal Reserve, and then that's how the money's made. So there's a lot of current crises going on currently that you see the U.S. government, typically the attorney generals will crack down because they have a discount window,
Right.
and banks are taking out money at a quarter. If you look at the rate sheet, they'll take out a 12-month LIBOR. I think you have to look at the rate sheet and see what the rate is, but they'll take it out for 12 months and they'll go sell it to a subprime auto loan company, and then the auto loan company will sell that, whether it's a half a percent, they got it at the discount window for, and on the short term,
Yeah, I'm
they'll
seeing loan
sell.
amounts 140 large, 0.25 points. 100 large, 0.625 points. I'm looking at the loan amounts, and then it goes over to subordinate financing, of course, right? And then it gives you your loan to value, and it breaks down the credit scores here. I'm going off the program specific adjustment.
Right.
Adjustments from the FICO score transferred or into the amounts and allocated amounts allowed depending on credit scores. But this is all for good. This looks like these are good lenders. Let's see if we got something here for bad lender or for bad customers or
That's actually the prime. Those are the prime rates. So
yeah.
those are typically
Okay, okay. I'm sorry. I was looking for something like 400 FICO score and see what the adjustments would be, right? But
right. So for housing, you would go with FHA, right?
right.
FHA has the 500 minimum credit score. I'm sure you could get an exception. If you have less than 500, you probably can still get the deal. But the FHA back in 2007, 2006, and before that, it didn't have it. That program didn't exist because FHA had a really strict guidelines. They had
Okay, I'm seeing the government adjustments here. This is from your window or your this would be from your window basically. So you would basically fit the customer. So somebody comes in, okay, I'm going to buy this house. You go over to the left, you check their credit score, you look at what percentage point you could give them. Then you go to the USDA FICO adjustment, and then that adjusts, and then you go ahead and basically underwrite the deal with those terms, right?
Yeah.
Okay.
Right. So those right now they're able to borrow those rates are really low, and
Right.
you're basically getting them directly. The 30-year Treasury and the other prime rates, 1.6. I think it was like 1.65 today,
Mm-hmm.
1.6. And then what happens is the Federal Reserve they want to make money, so they make like about 2% when they sell it to the bank.
Right.
So then FHA or the conventional conforming rates, those have a markup, and those are started. And then there's adjustments, like you were just saying. Those adjustments are based on the criteria of the deal. If if you're looking for cash out, you're going to have to adjust your rate, anywhere. I'd have to actually look at the rate. But back when Lehman was around, Lehman Brothers, we didn't have to look at a rate sheet. We had
Why?
it was the best system. You'd go in the computer, you type in their credit score,
Oh,
or
okay.
you pull into the file, you pull in their credit, and then the whole underwriting system was online.
Right.
You know, so
You would soft underwrite the deal to explain why there's a gap on file, or maybe why he's got an R6, and then you might have to explain why he had a gap in employment. Maybe you have to kind of explain that to the underwriter, right? But then you send it off to be finalized, and then they send it back to you with sometimes more things that they are required to approve the deal, right?
yeah, but the rates, as you can see, those rate sheets. There's a lot of different adjustments. There's
Mm-hmm.
tons of different adjustments. So when somebody, all the number one problem, customers always want things that they can't have. So
Exactly.
they'll be like, what's the rate? What's the rate? And they think that you're avoiding the rate. I'll tell them, hold on, don't go into the rate. Let me look at the criteria.
Right.
There's tons, and it's not just a few questions. You have to really get into it, and then there can be adjustments if the values of the properties. Some people say it kills the deal, but it really, because the customers think they got a rate, and then the adjustments will change the rate. So temporarily, it's really hard. Like, you can't give them a rate. But back when Lehman was there, you'd type in the criteria of a loan directly into the website, and it would generate the rate.
Mm.
So we'd know what the rate was instantly.
Right.
and we were just spitting out rates, and people were taking the rates. They just wanted the cash, but most importantly, they would take the cash because they knew the rate. Now everybody's, if they're not getting what they think that they should get, which is really hard. I mean, you have to be really like prime paper, like 800 credit score,
Yeah,
which
750 to
doesn't.
8 750 to 800, no gaps on file, no inquiries. Yeah, I know.
Yeah, you go to the bank, and most people know how it is with them. You know, so yeah, that was, liquidity. There was liquidity originally. Obviously, that's why they made all these programs. I think the programs, obviously there was a Republican in office, George Bush.
I remember, hold up. I remember when George Bush made that announcement that every American should own a house. Remember that?
Exactly.
Yeah.
That was, and if you look at these southern states, they love to pump out rate. Like they love to pump out money.
Hmm.
They between the Greenwich, like Connecticut, Boston area, and because everybody thinks the wealth is in New York City, but there's a lot of money in
No.
Greenwich and Connecticut, all the hedge
Oh
funds,
yeah,
but
Connecticut hedge fund, Hamptons, all up there. Big money, and those cottage properties. Huge.
yeah,
Let me ask you
yeah.
something. Let's fast forward. Okay, let's before we go to the next. I want to ask. Did you see mass deregulation of the system to allow crap to happen? Did they purposely deregulate things? And second part of the question: did you ever see anyone get arrested or get charged for Mickey Mousing things?
Oh yeah, yeah, definitely. At what point, right? Because I worked in it for a while. Pretty much everybody um, that was unscrupulous, most of them got caught. Um, we called them the paper cutters. The paper cutters. They were cutting
Pay
up.
stubs.
Yeah, they were because you know they they did have these programs, which was called Nina, and it was called stated income, stated assets.
Right.
But they I think recently they shut them down again. They had tried to bring those back. They're
Of
doing
course, they're gonna try and bring crap like that back.
yeah, because we have a Republican in office, right? He's deregulated everything, even with the EPA. Because I do commercial banking,
Mhm.
the first thing you do on a commercial deal is you do a EPA questionnaire.
That's correct.
Now with the Trump deregulating, um, I I know that it probably isn't brought up because the EPA really doesn't exist anymore, right?
Mhm.
Like it's still there, but it's been deregulated, and that's a major problem.
It is
Um,
it's actually I, I don't know like it's so hard to fathom like this huge dying tree. I see it as a huge dying tree, a tree that they're trying to keep it going. They're trying to keep the money velocity going. They're trying to keep the liquidity in the markets. They're trying to do everything. They don't know if they should give more water to the tree, more vitamins. Why is it dying? Does it need more sun? Should we move it closer to the sun? Should we reroute it? And that's what's been happening. And 2007 and 2008, we never saw the full correction. There was no full correction. There was an adjustment, and then there was a lot of bailouts, right?
right.
And and um, and now what is it? 13, 14 years. It's all back again. Now it's in full force, and then you have all these empty cities. Now let's fast forward to today. Now let's fast forward. Sorry, to last year. We had the repo markets going full blast. Tell us what happened with that.
Right. So yeah, so that was last year almost, right? It was I think that did happen. Actually, it was November. Um, it was, let's
2018.
see the exact. Uh,
It was November 2018,
well,
wasn't it?
it did start in 2018. That was the flash crash,
Yeah, that's correct.
and it did continue because they didn't fix the problem. They needed a bailout, and that was when the bailouts in 2019. So the but they were bailed out. So there was trillions of dollars that were already. So this whole March bailout thing was already months in the works. It was
That's
already
correct.
happening.
It usually takes about 4 months for them to implement it.
Right. So I took a huge I'm not investment banking for others right now. I was doing my own funds, but I had I was leveraged at that time. It was quite an event. So they did bail them out. It was trillions of dollars. So they did a repurchase agreement in the market, and
That's correct.
they had to buy out those the repo market that was under stress. It started in September as the treasuries, they had spiked. So overnight, I believe it went from the low rates it was at, and overnight it went to 10% overnight,
Mm-hmm.
and went to more than
9.87%, right?
yeah. And it was funny because at the time, I was talking to other people, and they kept saying, "Oh my God, the repo is going crazy right now." I said, "Who? Repo? They're gonna come, and it just happened overnight. It was unexpected." But
But let me ask you this question. To avoid the whole repo market fiasco, why didn't banks just lend to each other so they could close their overnight rates? It made no sense why they would have to do this when they could just borrow from other banks.
yeah, well, the liquidity, it was a
Yeah.
liquidity crunch,
Okay.
right?
I
And
get it. I get it. I get it. Yeah.
some of the fear came about. What happened? I think the real liquidity issue was I think the China financial trade. What we're dealing with is unfortunately somebody who came into the office as a Republican, the current, without saying too much about the problems with that. He came into office, and he had total disregard for the fact that we were skating on thin ice already.
Hmm.
We've been through so many crises, like we had the oil embargo creating the 1980s
Yeah, that was
crisis.
huge. That was enormous, and there were gasoline stations shutting down, out of gas everywhere.
Yeah, unfortunately people were struggling, and functioning on thin ice. And we had the dot-com crisis,
Yeah.
and that led to another. George Bush got into office, and like I said, with oil, another oil crisis. He what really pushed up, excuse me, the on Bush Jr., because it was a Bush Senior
Hmm.
who did the oil crisis. He was a director of the CIA in the 70s. And he owns oil companies. I sent you the other description. They own Brastos at Petroleum,
Hmm.
and they're Dick Cheney is
Halliburton.
on, yeah, Halliburton, and he's also Oil Genie Company is in and he works with Bill Richardson, the guy involved with Epstein
Oh,
Ponzi
your
scheme.
friend.
Right,
I'm
yeah.
just.
And and the other guy, the CIA director
Yeah.
Stein, and there's those. I mean, their benefit, obviously oil went higher for their benefit. They own oil companies, and they pushed oil. They created these what was Bush Jr. said there was a ballist. What is the ICBM? He said in Iraq there was no
No,
ICBM,
we
but
know
it's
that there was no.
yeah.
I guess
But
they for.
anytime they go into the Middle East and they create tensions, it creates the oil prices
Hmm.
to go
That's why I
higher.
always have like don't. I don't want you to think I'm kind of like a bandit or anything, but I always have a little reserve on the side in case we do go to war to buy oil.
Yeah, I mean, well, oil was crashing today. I mean, I
It,
felt
it did. It actually went back today. It retracted quite a bit today. I was reading one of the emails that I got from oil market price, whatever. Okay, let's fast forward to right now today. And we'll get more. We'll do other videos and discuss. We're gonna get more finite into specifics later on in other videos. But I want to ask you, if it's okay, your Q1 predictions. We're going into winter, and Q1 2021. You got spring. You got the housing market. Looks like it's doing well in the States right now, kinda doing well. And you got elections on the horizon. Give us a little
Yeah.
forecast. Okay, let's do this. What's going to happen if Joe wins, or what's going to happen if Trump wins, market-wise?
Okay, so let's start with Biden. Joe, let's call him Joe. He's a nice guy. I'm not really, I don't take sides, but as a person, Joe is a clean energy guy.
Mhm.
We all know that. And last night when we seen um, Trump try to attack him on, oh, you're a clean energy guy. You're not gonna, he loves to say that Joe's not gonna allow fracking.
Right.
But I never heard of Joe. He said in his response, he said, not on federal land. Nobody's allowed to do anything on federal land. Anytime, even if you try to go step on a federal property and they don't want you on property, they got M16s and they're going to probably lock you up.
Mhm.
So, yeah, nobody can do anything to destroy any federal property that's, controlled by any agency. The U.S. established that a long time ago. So he's a green guy. He's green energy. He wants to establish maybe electric vehicles. California is a green state. They have that mandate where they're going to force everybody to have non-gas vehicles by a certain year.
Mm.
So they're going to design certain bills to try to lower the carbon and the emissions and produce sectors that are going to address the greatest environment change to avoid. Obviously, I'm in the South, and it stays warm here all the time.
Right.
Anybody who lives in the South will tell you the temperatures here are great. It's global warming. The seas are rising, the poles are melting, the circulation. These patterns and the concerns of these kind of changes of a developing country and having an overpopulated world in a global market. There's just too many people. If everybody's driving around, so and what happens is you have this whole COVID pandemic has shut everything down. It's driving down the demand
Production.
for right. So everybody knows that. So they've been buying these electric vehicles, and Tesla's going up and up and up, but now it's not going anywhere. It stayed flat because even if they came out with good quarterly numbers last week, you're not seeing any additional data that's really changing anybody's mind. The market's already priced everything in. So most of it is already priced in with Biden winning. It's about 65. You see the poll numbers. So Biden again. I do see an expansion if Biden wins in the markets, and it's mostly steady because of there's really no erratic energy from Biden. And he has expertise. He's very flexible. He knows what he does. He sets his targets out, and he gets things accomplished, and he gets things done. The downside, though, I do see a lot of development in new energy with companies that are not they're not well built, and they put money when he was in office, him and Obama, and they had invested money into these green companies that went bankrupt,
Yeah,
and
that
that was
went
a
nowhere.
problem. There was it was like one. It was called like One Batteries. There was this other one. It was Solandria. They put billions of dollars into these green companies, and the market just it didn't react well to it. But again, it's a market. You take risks, you make investments, you have a risk, and everybody knows that. If you even whatever investment you put your money into,
Mm.
you're gonna take some risk on it. You might lose, but that's the name of the game. If you lose, you just take it and try to get the next one. So
Okay, Trump
I
wins. What would happen?
Trump wins. you basically will see a retaliation against China. He's gonna either hold them accountable for the trillions of dollars that we've had to come out of to borrow. So thinking that he takes the money and says, "Well, we're not going to pay you, or you're going to owe us trillions of dollars," and that will lead us into the doomsday. It's basically apocalypse if he wins. At the end of the term, we're going to see the end, and then in the beginning, we'll see an expansion until he starts going after China. Like what we've seen with him with his China war started, I think that was like 2018. The tariffs. Most people didn't really see it; they were long-term investors. But if you were a day trader, I mean, you took a huge hit because he came out with these tariffs. The market dropped. So the market, again, the repo market was an effect of him doing erratic behavior in the market. He enhanced the volatility and the risk and the efficiencies of the market being stable, which
But you
is
got to remember the yield curve was going nuts at that time.
Yeah. The yield, the repo, the liquidity went crazy. So there was really no liquidity, and that was basically because of the trade issues that he created.
That's right.
With the retaliation. We were dealing with he did it to them, and then they would do it to us at the same event. People, if they're really patriots, they shouldn't want erratic behavior. They should want progress and slow, steady progression and impressive limiting costs, but at the same time getting a benefit from putting their money to work as a utility.
Right.
You want to build your savings, but you don't want to be put out of work and then nationalized, like following what Russia does, and the countries take over companies because they end up giving them money, or they really took control with this paycheck protection program. They're giving away money. They're installing themselves in these small businesses now. So that's what I think is really happening. Over nationalized.
Yep.
And increasing the deficit obviously wouldn't be a good thing, but it's happening. And
it's happening.
They're not right. They're not counting their investments. So they've gone into what I've looked at. It's trillions and trillions and trillions. Anytime I give the exact number, we don't know because it keeps growing and it's gone up so much.
It's going to grow a couple of thousand every less than a second. It goes up a couple of 10, 20,000 every less than a second.
Right.
Every microsecond. They said they broke it down to microseconds, dude.
So they put all these trillions of dollars, and they also invested into the bond market. Mm-hmm. So this is the first time ever in history where they've bought junk bonds. They're not really junk bonds, but they're close to it. They're corporate bonds, and they're oil and gas bonds, which nobody should be buying. The country shouldn't be taking out debt to buy corporate bonds in oil and gas.
No, definitely not. It's the biggest Ponzi corporate broken conveyor belts that they're just trying to keep together. Now, let's go. We're going to wrap this up. But before we wrap this up, I want to know Q1 predictions, Q1 2021. What do you see happening? Do you see? Just tell us.
Yeah, so I sent you the picture of the market, the Nasdaq. Obviously, the market has been technology since March has gone it's gone up so much. You have Amazon. It bottomed out around like $1,600. Now it's at like $3,500. I don't even trade Amazon. It's just too much money. It's crazy. $3,500 a share. You're going to see either way. There's going to be whether it's like 1.9 trillion or 2 trillion. That's a lot of money, so it's going to be put in the market. Obviously, nobody should be investing now unless they're buying these social media apps because people are going nuts and they're sitting around doing nothing most of the time or filled with nonsense with people chatting all the time. So it's understood that a lot of their energy is being spent on social media. So social media stocks have actually been doing really well from this whole pandemic and
Hmm.
everybody locked down. So they will continue to do well. You're going to see that, and those social media stocks are technology stocks. They're on the technology index, the QQQs. The QQQ has gone up. Um,
Well,
so
let's break it down like this. Let's break it down in very easy layman's terms. Gold. What do you see gold doing Q1?
So because of another $2 trillion in the market, there's going to be a hedge on the risk
Right, that's
of
correct.
right. So you're taking um, more risk. Then people would want to make sure they can protect their assets. So yeah, gold, oil. Uh,
Do you see gold staying over the 2000 mark next year?
My price predictions, like short term, is gonna gold is gonna be probably like $3,000, come like June, I would say.
Wow,
Um, be,
2500 bucks?
yeah, it's gonna be up there. It's gonna keep going. That action, and what will happen is it'll keep going. Well, if you look at the technology index, I sent you the chart.
Yeah, I'm
It's
gonna put it
gone
back
up
up. Yeah.
so much. It's gone up. It's never gone up like this, right? So the last time the index on the technology went up, dot-com bubble, um, it pulled back down to the pre level.
That's
So
correct.
we're going to get a big capitulation and it's going to be a big run up. So I'm technology wise, I think the index will go above 20,000 on the, and it currently it's at 11,500. So you can see, yeah, it's just like the Bitcoin. People are going to chase the FOMO. They're going to run into it. Everybody, even the kids, the 20-year-olds and the older generation. Always a battle between the younger generation, the
So
older
you're seeing a
generation.
melt up in the Nasdaq is what it is.
A complete
Melt up.
run up. Yeah, you're throwing money left and right at it. Again, what they can do is they can just keep throwing money at it, because there really is since there is no gold reserve, we're just running a fantasy. It's just
Exactly.
an excuse. Yeah, it's just an excuse. They can keep throwing money at it.
Okay, hold on.
Trillions every.
Silver.
Mhm.
Where do you see silver going? Do you see it going above 25 bucks, 30 bucks ever?
Oh yeah.
Okay.
Oh, it's maybe by June again too. It runs with the gold, so we're going to see
Maybe
above
what,
maybe
$90
$50.
silver?
Well, yeah, it could go. It can go. Long term wise, I would say, yeah, above $100. Yeah, it can
Oh.
go above $100. There, these have been moving more than the more rare metals like the the platinum.
The rare
Platinum
earth
used to
stuff,
be,
yeah.
yeah, platinum used to be more.
Oh, and palladium and all that other crap.
Yeah, yeah, those were considered, like if you had a platinum, you were considered, whoa, you had a platinum necklace or something. It was like, wow.
Okay.
Now it's less.
Oh yeah,
So,
for sure, it's dropped. Okay, now let's look at the. We got gold and silver, oil. Do you see gold oil sticking at about, let's say, $60 by next June?
well, see, it depends, who's in office,
That's
right?
correct. Yeah, we got to
Right.
take that. Okay. Well, depending on who's in office, we could see oil go back, but crawl right back to $30 a barrel, easy.
Uh, yeah, and it could, since they're throwing money into the market, the oil can go this, right now at $30 a barrel, the oil companies are still losing money.
Yeah,
You know,
I think they're like they're short $41 or something every barrel that's produced or something, right? Or $39, right?
Yeah. So
So
you see ExxonMobil's given a 10% dividend. Yeah,
10 points.
yeah, they're getting 10 points right now for
So
the
if you put a
dividend.
million bucks in there, you'll get 100 grand.
Yeah, right.
Wow, that's enough money to get me to downtown Detroit.
Right? They just did it. I know a lot of people haven't picked up on that yet, because they people haven't been getting involved. I've been buying. That's pretty much the only thing that's been making money lately.
It's
Prior
dividends.
to the recent, yeah, because I mean we went negative with the current president. We went negative twenty
Oil, yeah.
dollars or $40 it was
I don't know if
at
you
one
saw
point.
my video. I made a video before oil crashed. Like, actually made a video that I said I was watching the all ords, and I was watching the Australian market, and things weren't looking good on that Sunday night. And I was watching the Monday markets in Australia, and I'm like, wait a minute, I'm gonna make a video right now. I made a video saying oil is gonna go negative the next morning, and before markets. And what happened? Oil went negative because I was watching it so closely on the All Ords and the, you know what I'm saying, the New Zealand Stock Exchange. I was watching that, and then oil just, something was wrong with supply, and then there was some sort of an issue with. I was just watching things, and I'm like, oil's gonna go negative. This doesn't look good. I made a video and I took a chance on it, and I felt better the next day when it did go negative.
Yeah, I mean, if you was shorting oil,
Yeah.
um, that was significant pressure. I also, I sent you some things. Saudi Arabia was involved,
Yeah.
um, and we
Hold on,
had a
we'll get
lot of.
into that later. We'll get into that later. Let's go to your forecast. 2021 Q1, Q2. What's going on? So we got gold, we got silver, we got oil. Depending on the on who's running things. What do you see the Dow? You see it staying above 20K?
So, um, you know, the the Dow is considered in like the large caps, right?
Right.
It would go up, but I would see a more conservative move on the Dow because of the large caps don't move
As much.
um,
Yeah.
as much as technology companies tend to. And I would like to get the Dow up, but I mean
The Dow.
the
The only
way
way
that.
I see the Dow going up is if you have a runoff on the tech the Nasdaq starts to, and people start going to a safer haven and going with the bigger cap stocks, right?
Yeah, I mean
I could see
the
that
older
happening. I mean,
generation likes the big cap stocks. They like, they're very smart. They do like to um buy the Dow stocks, and I do agree with them. They're long-term investors, and they're really they're the resilient type of people. They buy and they hold. The younger generation, they're the tech.
I know, and
um
that's the melt up we're talking about that we could see in Q1 of 2021, and that melt up could cause people to go to safer havens like silver, gold, maybe go to bigger cap stock, maybe something that's paying a better dividend, and you could see another a tech breakdown.
Right. And I do hope that whoever wins, that they're more humble than the current, because he made his whole position on the market.
Mm-hmm.
And um I don't think anybody should be making their position in politics based on the economy, because they do control the economy. But what happens is when they start to use their ego and talk about their number one, and then when they throw it, oh well, China wants to be number one, and we're going to be better than them. You do create enemies in financial world, and anytime you go and you say, well, I got more money than you, I'm better than you, guess what? The competition does make you successful, but it also can create a disadvantage, because your ego gets in the way. And
Mm-hmm.
if you're not humble about the economy, we see Saudi Arabia and Russia come in and they destroy the oil market in a day, cause it collapse 35%. And it wasn't really necessarily the pandemic. It was the we had created these tensions with Russia and Saudi Arabia, and they can crush us at any given time. And that's the thing about the markets.
Well,
We're
because
an
you're so energy
international.
dependent, right? And remember that the dollar was pegged on energy, right? The dollar was the U.S. dollar was heavily pegged on energy, right? Especially when
Yeah,
it's the reserve currency, and then if people want to buy oil, they got to use U.S. dollars. And now a lot of countries are not using U.S. dollars anymore, and a lot of countries are looking at creating a gold-backed currency. Like China's been buying a ton of gold, and Russia's doing the same thing, and they just don't want to trade in U.S. currency anymore, right? And you saw what happened with Hussein and all those guys when they didn't trade in U.S. currency, right? So hold on a sec. I want to brag here. So here's the video I put up on the Sunday. Oil down 15.50% in 2 hours. Crude oil will go negative. So basically, this is the video I made on the Sunday when I was watching the Australian stock market. And it says, oil will go negative come Monday despite the historic OPEC production cut deal, available oil storage capacity around the world. So actually, that's the video I did on the Sunday before it actually went. And no one even saw this video.
right. So that's why Biden wins. It would be a benefit for everybody, because if he gets us away from this oil, we don't need oil. We don't need it.
That's
Obviously,
very true. Like, yeah,
you know,
oil's nice. It's good. I get it. But, yeah, we're too heavily... I'm going to agree with you on that one. We're too heavily dependent on energy, like oil for energy. Like,
and that's been every crisis has been based off of oil. And even back in the
all the
Civil
big
War,
wars, yeah.
yeah, American Civil War, oil went to $100 a barrel back then too, and look what happened.
Mm-hmm.
We had internal issues. Now we have external issues out of the country, and each time these issues happen, the oil goes through the roof. But who does that affect? That affects the consumer. It affects us. We don't want to be spending $100 every 2 days if we're gonna have to travel to work. Now everybody doesn't travel to work. They're working remotely.
COVID.
Everybody's on.
Mm-hmm.
Yeah,
Let me
everybody's
ask
in
you,
the house.
housing. Where do you see housing going? And do you see more defaults happening in Q1 2021 because this stupid forbearance is going to start expiring? Do you see more people, defaulting? Do you see housing taking a crash? Do you see a correction? What do you see for housing?
So, since I work in that's my industry right now. I'm a commercial bank. I do commercial financing deals. Again, everything always. I guess I work in finance. I always get affected, but these deals, commercial banks, we need a bailout. We need more. We don't want the government to take away our business and to create. They created these lending facilities, right? So they created their own discount window, but it didn't work. And we want to go to work. We don't want them to create a crisis and shut down my company. I want to go to work, and whether the current person in office, I take responsibility, but it's China's fault. No, it's stop going around poking people in the eye, and you won't get us as a consumer affected, and our businesses.
It's a little
down,
guy. The embargoes, the trade, the prices go up on everything. Then food shortages, all the Mickey Mouse, and it becomes a bigger issue, right?
Yeah. So I do see on the web a lot of people are hounding the fact that there's a forbearance, and they put it out there. I see a lot of it, and I work in the industry and banking. Most of them are real estate agents that put it out there, or have some type of real estate experience, and they put out the forbearance. I wasn't like I called a couple of clients yesterday. They didn't go into forbearance on my deals that I wrote for them, and they were actually rewriting those deals. So I sent you the rate sheet, right? And you see those rates are really low.
Mm-hmm.
I think the housing market is going to continue to expand dramatically in America.
Mm-hmm.
Right now, I sent you the real estate sales in New York City. There's been a huge, it may be like a 40% deduction in prices. Those houses, the reason why I sent you those houses used to be like, even for a 1 bedroom in New York City, and in those areas, we're going for 1.5 million. Now it's like $600,000.
Yep.
I mean, anybody would be a genius. You step in now, you capitalize on that. That was like back in 9/11. The house prices were deducted about 40%, and these people held on to their real estate, and it went up dramatically after that. Now after 19 years, those house prices, back in 9/11, you could have bought a house in Manhattan for probably $200,000. Now they're worth 1.5 million. Well, now they've come down, but I would say there were, so those houses I sent, some of them are like 600,000, 700,000, 900,000. I would say those houses in the next year would be worth double. And it depends on each market area. You have a lot of typically when the market expands in real estate, you have a lot of these farmlands will dramatically increase. People will see it as an opportunity to put their assets in a safe investment, so they will buy up farmlands. Right now, that's where I'm seeing a lot of demand. I just spoke to some clients yesterday. They're buying up farmland. And on the West Coast, I do see the house prices are priced a little bit differently. You have a lot of people who are living on the beach. So anytime you live on the beach, there's always high demand. You get higher prices. Those prices are reflecting those type of neighborhoods. And also on the West Coast, you have a lot of rich people. Actually, I think the West Coast is more rich than the East Coast.
Big time.
Or
You
New York
got
City.
Washington State, where the cost of the average condo there is like going beyond reach for the locals. You got Oregon, that's tipping right now at 407,000. And then you got California, where the benchmark price right now is about $800 and something thousand.
Right. So I have a team, and my team actually they're setting up the office. Post COVID, everything's back to brand new. We have to they're getting new offices, and they're expanding again. And I have a team out in California, and they're capitalizing on the fact that those markets are a lot higher. They're going to continue to go higher.
Well, percentages go up. Everything. Well, percentages don't go up. The commissions and everything go up, right?
Yeah, of course. Like if a house is worth $2-3 million, I tell all my customers how much I make. Obviously, you get customers who if they don't want to be a customer, if you make money, then obviously they're not the right man for you. If you don't want me to make money, I don't want to do business with them, bottom line. But if you want me to make money, I'm willing to try to get you what you need to get the job done. I mean, the deal has to be good, obviously, and it has to be realistic for me to spend my time on it. But if you have a goal to make money, I want people to make money. I don't want them to get involved. And I don't put myself. I've never wrote a bad loan ever. So,
why would you? I mean, you could. A lot of good underwriters could look at a deal and say this thing is going to fall apart in 6 months, right? And
of course,
a lot of the feds and all these banks and all this Mickey Mousing, like you mentioned earlier in the video, they know it, but they're still lending money out to people that can't pay. They know they can't pay it back. Then they go ahead and take that debt and give it back to the Fed. The Fed swaps it and gives them back some fractional reserve money on the bad money.
Yeah. These especially out in the West Coast, people they're running. I see it's its own environment. They have their issues there. There is a big disparity. With a lot of wealth, you get a lot of people who don't have money. They want to go into areas
and cost of living. But the price of, I mean, but that's a topic for another time. But we could talk about a lot of that divide that's happening, especially between the disappearing middle class and stuff. We could talk about that too. But anyways, listen, Dex, I'm going to let you go because we've been talking over an hour. And
Yeah.
It's been great talking to you. We'll get you back on. We're gonna make a video top 10 reasons why you left not why you left Wall Street, but why you left New York. We'll do a video on that if you want. You can give us the whole, I guess, the back room talk if you want, and we could go from there.
Yeah. Yeah. But I appreciate, whether or not it gets out to your audience, it doesn't, my main thing is I just love the way that you share. You're really a counsel for people to see the good. There's a lot of people, we do see a lot of sharp activity from, the volatility of
Right.
just the erratic energy policies and the way things are established. And so, I love getting involved. Um, again, things are getting back to normal. Things will be better. We'll just have to see, how things just play out. I love forward looking, but we don't have, we're fully, the whole globe is fully dependent on people that have too much power, to control the way that we live our lives.
Mm-hmm.
And we try to have as much freedom as possible. And I just love how you get it out there and you allow, you allow people to see that this is going on in this part of the world and this is going on over here.
Mm-hmm.
And that's important, because that if people don't know what's going on in New Zealand or something else, and you kind of opened up their eyes to me, because when you post like that there's a house for like $3 million and it looks like a house that's not even supposed to be worth 50 grand. I you know what I mean? I said, like, what is that? What is that? A manufactured home on a slab of concrete and they're getting $3 million for it?
Yeah.
So, I mean, you open up your eyes and you really are like the Steve Jobs, like I said from the beginning before when we had a conversation. You're a disruptor, and you're a Steve Jobs. You're bringing people and into the world. You're bringing awareness, and you're letting the world know what's actually going on, driving change, because we really can change things, because we don't have to. Each country doesn't have to be nationally involved. You have to realize this is a world, and we're floating in a universe, and we're just a ball, and we're all in this together. And if people in this country are driven only for their own nation and make America first or whatever, it doesn't work that way, and it won't work. It will be the end of time.
Right.
But we can get through this. We seek out certain things. Hopefully, that the polls are right, and
we'll see what happens.
Policies will be the
We're
way.
like 14 days. What? 13 days? 14 days. We'll find out.
Yeah. All right, brother. I really appreciate you so much. All right. Hopefully, we get on to the next production.
Yeah, we'll do something soon. I promise, Dex.
Yeah. Thank you so much.
God bless.
Thank you, sir.
Bye.